Hey guys, Sierra Bailey here with Accel Commercial Real Estate. The video you're watching ties into our event in June, Accelerate. If you want to learn more about what you see today, scan the QR code on your screen or click the link in the description to get your tickets now before early bird pricing runs out. Enjoy the video.
Things you mentioned, two great things you mentioned in that. Life insurance will hold you up. It can, because you have no control of getting your medical records from the doctor. We take your health where it is. I'll coach you on a good underwriting decision. I'll coach you. We're going to do an exam first thing in the morning. I want to make sure you're hydrated. I don't want you exercising the day before. Little things that can negatively impact the underwriting decision. First and foremost, we have 40A rated carriers we can go to. 40A rated carriers. But outside of that, what if you're a rock climber? I just had a conversation with an individual, kid you not. I've actually got two. Lloyd's of London. I'm appointed with Lloyd's. Okay, we're having to get specialty insurance because this individual is going out of the country, have an approval waiting, and in the midst of the back and forth, and he started with his carrier, someone he had insurance with, they said, can't do it till you get back, 30-day postponement. Okay, it happens. So the bank reached out to me and said, I know if anyone can do it, Cindy, you can fix it. What can you do? Made the introduction. I'm talking to the individual. He's out of state. I'm licensed in, I think, 27 states. But point being, doesn't matter where you are. Knowledge is power, because I'll help you. Pick up the phone and reach out to Lloyd's. Now the seller, now this is a business, but now the seller has said, not today. Don't think so. I have Lloyd's ready. So we're waiting, just because of where maybe you're going or something you do as a hobby. Could either cause you to be rated or high risk. You know, until you go through your day-to-day life, you don't think about little obstacles, not following up with the doctor because they said, oh, you're good. You know, we had cancer, but you're good. You know, you're past your window. The doctor's record says, I need to make sure, and you need to come back. All of those things can be a holdup. You've got earnest money, just like Jana said, that you've put on the table. Now the bank's going, wait a minute, you're part of my collateral. What do we do? So we do, again, have options that we can go. Lloyd's doesn't guarantee that they'll issue it, but Lloyd's is also, it's risk-based pricing. Just like hard money, you're borrowing, it's risk. They're charging you for the risk. So then you're paying more than you need to charge. And I hate to see that happen, but there are opportunities to get it done. And where Jana also said, build a relationship. I can tell you of two individuals in Middle Tennessee who bought permanent life insurance policies years ago. One borrowed from the policy, bought a very expensive working horse farm from borrowing from herself. So she didn't have to worry about the bank or someone else. And she's got that, you remember that, borrow for myself at 3? Bank or the insurance company gave me 2. So she's in a situation that she's actually got a net 1% on a loan that she's paying back into her policy, that if she died, so she's in the driver's seat. The other individual opened a winery. Okay, took cash from a permanent policy and opened a winery. You can actually take the premiums you put in a life insurance policy out, the premiums you paid, not the gain, and it's return of premium. You don't pay taxes. Could affect the death benefit, but if you're starting to fund something over time, this is just another avenue that where maybe you need money to put down for the bank. Okay, now you've got part of your down payment. Whether you borrow it, okay, that affects the cash flow, or whether you extract what you paid in premiums. So,
isn't that an awesome tip?
Yeah. And it's non-taxable because it's a return of your premium. If you take $1 more, if you take any of the gains are taxable. But this is something that you can do. And again, I'm a huge advocate of even investing, do your Roths, things like that. If they've sat there for 5 years, you can take assets there. Start slowly building additional wealth, because maybe the rates are going to be high and you don't want to, again, I'm a banker, once a banker, always a banker, recovering, very conservative. So understand that's just, but I am more holistic and global in what I look, because there's no one avenue that's always going to be the best answer. You know, you may own millions of dollars in real estate, but there's going to be times you don't want to sell that real estate and you're needing dollars. So again, having other avenues or where you can go get a down payment. Maybe you've got a kid that you're wanting to start them investing. Maybe you want to let your wife go do decorating or something of that nature. You've got extra dollars that you can truly control the situation.
So let's talk about that life insurance in relation to estate tax. And
Sure.
so, and how would that, so obviously we're building generational wealth. Now you've got the wealth, and let's talk about what that might, how does that relate?
Okay, it's a great question, Jana. So if we're looking at building wealth, we all are aware that our current administration is talking about changing tax laws as well.
Boo.
It's something that can happen. So not knowing where the estate tax laws are at the time of your passing, everyone here is young, but not knowing where it is in case you got called home early, you want to pay attention to that, because anything you own during your lifetime is part of your estate. So if you own a life insurance policy and you've got $3 million in life insurance or $15 million in life insurance, and maybe you've got another 5 over here in real estate, that's part of your estate and it's taxable. It can actually pass to the beneficiary outside of probate, but you need to make sure you're managing your tax brackets there, your estate tax bracket, obviously, because again, you can also use life insurance to offset estate tax, but there are beautiful things called trusts. You can do a life insurance trust. You can do revocable, you can do an irrevocable. There are spousal lifetime access trusts. There are many trusts that you can set up. Now you've set up this other entity that owns the life insurance policy. And the beautiful thing is, if it's a spousal lifetime access trust and you are kind to your spouse, then
Hear that, Brian?
see, as long as you're kind to your spouse, you can actually access the cash inside if you need it. So there's some really, I call them sexier planning ideas, because life insurance doesn't have to be I buy it, I die. That's what it is. Life insurance is probably one of the most versatile tools that you can use, but not owned properly can be taxable. If you own it, depending on the estate that you have at the time of your passing, it can also be part of your estate. So you can create additional tax that may not need to be there. But for pennies on the dollar, it's a great way to go.
Well, especially when you think in your mind that you have protected your assets and created some sort of way for your loved one to get a benefit, and then you get that rude shock that Uncle Sam is going to take a giant chunk.
Exactly.
And so how do you do that? You know, how do you protect that giant chunk? Right. And that is partly by having someone like Cindy walk you through setting up that life insurance. So we watch the commercials on television all the time, right? The 15 minutes and save you less or whatever. And then they, oh, and by the way, that check the box if you want information about life insurance, or you have a corporate job and they send you the policy to just say, we will cover you with X. Well, what does that mean? And how do you set that up? That is like the McDonald's version.
Yes.
That's the fast food version of life insurance. And you're missing out on all of these benefits by setting them up in the proper trusts, and being able to know what to cover and what not to cover. And then once you have that if it is collateralized, or you can borrow against that, what are your limits and how do you set that up so that it doesn't bite you? So obviously you don't want to be someone faint of heart by and trusting to someone who's a newbie who has not dealt with real estate issues in particular. Can you see why that would be important?
Oh yeah.
So have we given you some questions to ask your own life insurance carrier? So the question is, would it make sense to get a whole life policy if you're over 60 and you already have one?
Okay. So,
Or
if
you don't have one, excuse me.
so permanent insurance is wonderful. We could look at whole life, but we're also in what could potentially be a rising interest rate environment. So I'm a bigger fan, and I'm not hating whole life, but typically whole life does the job. It's good. It works. the way I look at it, you pay a bigger premium, I make a bigger commission. I'd rather see you in universal. So if you think of a chassis, you've got a rigid chassis, like you've got a 5-speed. So it's very
He's a
rigid.
car guy, so you're
So-
picking the exact.
How wonderful. And this is how I typically explain it. So if you think of a rigid chassis, you've got that, I love my 5-speeds. Love a 4-wheel drive 5-speed. Prefer to drive one. Are they as effective on fuel economy? No, because again, your whole lives are typically looking for policy premiums on a regular basis. If you take a withdrawal, you trigger a loan. If you don't make a payment, you trigger a loan. So I am more a fan of what we call a universal. So it's more like your automobiles today. Even if you were doing a diesel, let's say you have a Duramax and you can actually go manual, or you can use the automatic because you've got the ability to do both with a shifter. A universal says I can actually, if I don't make a payment one year, maybe you've got a year that you have a tighter finance because you've done some renovations to your properties. Maybe you've had some tenants move out. Cash flow isn't quite there. As long as there's cash value in a universal policy, your policy is still fine. It survives. We may need to catch premiums up down the road, but it's not going to trigger a loan. But yes, a permanent policy to accumulate cash value is a great way because especially while rents are high, properties, you've got income coming in and you're making dollars, that is a wonderful way to put money back. So in the state of Tennessee, cash value inside of a life insurance policy is protected. Not all states are, from creditors and predators. So what if you've got rental property and someone actually got hurt and they tried to sue you, whether you have an umbrella policy or not? If a spouse is your beneficiary, it protects you in bankruptcy situations, but it also protects you from lawsuits. So again, Tennessee is a great state to have cash value and a permanent policy. And when we talked about trust before, I forgot to mention, with estate tax or owning life insurance, spouses can inherit unlimited between one another, but it's after the death of the spouse. You could potentially have a taxable estate. So it's easier to plan on the front end to do some simple transactions. Does that help?
Thanks for watching this video. If you like what you see, be sure to follow our Generational Wealth Learning series. On select Thursdays, we offer cutting-edge industry information that would normally cost thousands of dollars. And the best part, our education is absolutely free. If you register through our events page, you can join us live, either in person or over Zoom. In the meantime, like this video, comment down below, and subscribe to our channel so you never miss a beat.